Good evening. My name is Salazar, and today I'm going to talk about my working capital management project. The company that I have chosen to do this project are American Tower Corporation and Crown International Corporation. Um, I'm going to give you a brief introduction about my main company so you can understand why it brings to my attention to work with this company. American Tower Corporation was founded in 1995, and since then, it has been very successful. On 1998, this company started being part of the New York Stock Exchange, and by the 2000, it was also part of the S&P. In the 2000s, they opened their new facilities in the India, and by 2010, they start opening connections with South America. After that, from 2010 to nowadays, it has been part of the Fortune 500, and also the CEO has been part of the top 100 CEOs of the world. Saying that, I would like to start talking about the measures, the financial measures that I have done, and how are they important to see how the company is doing. So we have the liquidity ratios that are the most common ones, which is current ratio, quick ratio, and cash ratio. What is really weird about these ratios is that the current ratio has been decreasing since 2016 to 2020. In 2020, they're 0.68, and in 2016 it was 1.04, knowing that if that ratio should be more or equal than 1, so the company liquidity is good. The quick ratio is 0.68, and the cash ratio is 0.48, which means that this company right now in 2020 was making more current liabilities, than current assets, making it no liquid. What do we need? We need liquidity. We need to show our shareholders or creditors that our cash flows are fast. When we go down, we can see that there's inventory, there's receivable, and there's payable. With this calculation, we can find the cash conversion cycle. But the most important one is the days receivable one, which, as you can see, in the 2020 is 23.22 days. But if we average all this, it will be 23.11. So it takes 23 days to find out that the sale have become cash. If we go more down, we can see the equity ratio, debt, and the debt to equity ratio. The debt to equity ratio, unfortunately, is very low. It's 0.19. But the equity ratio is very high, and this is good. Why is this good? We need to show the shareholders and the creditors that our company is not high in risk. We need to prove them that our company is having a good revenue and income and doesn't have a lot of loss. Another amazing calculation that I can see is that the operating profit margin is from the 2016 to the 2020 have been increased, and now it's about 35.9, and this is amazing. Why? This company works with towers, with a lot of equipment, with a lot of people, men, and we need to see if that's working. So, the operating profit margin is showing me that all the operations are working. That's why this company has many international places. And I will say that this is very high because this company has been focused in countries that are no that their currency is not the same as the dollar, is lower. So now, as we can see and we can think about it, the money that they're spending in the operation is going to be lower of what they're going to achieve. That's why the operating profit margin is very high. Now, we're going to talk about the return of everything. So, before I show this information, I also have the information about the Crown Castle International. And something very that caught my attention is that the current ratio and all the ratios are more low than the American Tower Corporation, which means that even with American Tower having a lower liquidity, this one has more. It's lowest. And after that, as you can see, the operating profit margin is higher. However, the cash conversion cycle is higher too. So the sales is not becoming cash as fast as the American Tower Corporation one. So now I'm going to talk about the financial plan and cost behavior of the company. So between these two companies, the most successful one has been American Tower International, as you can see. Which brings me with the conclusion in the company cost of behaviors that the financial plan that been operating for decades has been working and being successful because the company is creating an incredible profit because of the cost of labor. Now I'm going to talk about the cost of capital structure and dividend policy of the company analysis. As you can see, and one of the companies that the company has focused on is their investors. Its a capital has been developing some percentage to offer their investors that the revenue is going to keep increasing in the future. Also, the capital structure in an American Tower Corporation is targeting on business and financial risk. This information can be found in the financial statement of the company. Now I'm going to talk about the working capital, investment, and short-term credit. As we could estimate through the financial ratios, American Tower Corporation has a low liquidity. For this reason, the main short-term goal should be increasing the total assets, so it is able to be higher than the total liabilities and generate better revenues in a short amount of time. First, the company should minimize non-productive assets. Second, the company should maximize the productivity. And the last option will give an improvement instantly of revenue because of the cost of production is low. In the inventory and account receivable management, from 2016 to 2020, the account receivable had been increasing as I showed. And the days receivable with the average of 23.1 have been working. The credit and account payable management. Account payable is an important factor in the balance sheet. In most of the cases, if the account payable of the company is increasing, that means that the cash that the company had is paying and it's not enough, and the credit is increasing because of any factor. For example, buying services or equipment. The higher account payable for American Tower Corporation has been in 2020 with $139,100,000. In the other hand, the last account payable from Crown Castle International is $230,000, which is significantly lower than the account payable in American Tower Corporations. The payment methods practiced by the company. The first and most important thing in the American Tower Corporation is that they do not accept credit cards payments. An ATC, and let me quote, an ATC representative said, "First and foremost, I want to let you know that in an effort to alleviate any potential financial burden you may be experiencing during this difficult time, ATC will be switching you to 30 days term for any invoices that are already received and approved. Taking this future, any invoices received and approved in April will also be entered into 30 days term. Our standards rules for invoices will continue to apply." Now I'm going to talk about account receivable monitoring and control. Control over account receivable truly starts with the underlying making of a client receipt, since you should limit a few issues during the production of account receivable before you can have an extensive arrangement of powers over the key resources. Control of the power range the legitimate support of the account receivable and through either installment for clients of the age of credit updates. The cash position and cash management system. Here I will show the free cash flows of both companies. In this case, the free cash flow of Crown Castle International is negative $16,433,000, and the free cash flow for the past 5 years of American Tower Corporation have been increasing by the time. Disbursement and collections. Disbursement is used when it is an amount of money pending to be paid and giving it to a beneficiary for an account. Cash disbursement can calculate the value of the money that is going out of the company, and it cannot be necessarily part of the company income or loss. It's a way to pay a client for a public institution. Collecting is a tool that helps to process the payment into an account application. And finally, I want to talk about liquidity management. Liquidity management is the future strategy that American Tower Corporation will make to achieve the short-term goal and cash necessities without affecting the company profit or generating any loss. American Tower Corporation should improve the liquidity of its assets, make the asset maturity shorter, and make the liability maturity longer. Following these strategies, American Tower Corporation should increase the liquidity and increase its position in the market generally. As a conclusion, we have the American Tower Corporation is one of the most successful and powerful companies in the communication industry. However, as many companies, it can have some difficulties in their financial statement. American Tower Corporation is to increase its liquidity and maximize its operating margin. This working capital management project gives a detailed explanation of the American Tower ratio and analyze every financial aspect of the company. Also, bring a different perspective from the main competitor, Crown Castle International Corporation, and shows its strengths and weaknesses. American Tower Corporation will continue increasing its value if the treasury management can take advantage of the international opportunity and have priority the liquidity management. This is the end of my presentation about my project. I really enjoy working with these two companies because, as you can see, these companies have had a good path in the communication industry. I hope you like it. I hope you understand. Thank you so much.